in recipic, you should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. Am I reading this right about the Google split? Woo! Yeah. $20-for-1 split. Did I read that right? Where was that here in the VTF? Thanks, Mike. I'm surprised Google's not up more. You get 20-for-1 stock split on Google. Wow. Where's that going to bring us to? Like $150? Am I doing that math right? Dude, I will love if Google is trading it as a $150 stock. Oh my God, that's awesome. That is so awesome. Google has been like very hard to trade because of its expense for so long. Dude, if Amazon were to do the same thing, this market will be back at all-time highs. Yeah, exactly. There's been chatter about the Amazon split for quite some time. Wow. Google up 9% here after hours. Looks like their earnings numbers were really solid also from a periphery glance I was kind of having there. We got Starbucks out too. What's S-Bucks doing down? China sales no good. Starbucks, Luckin Coffee taking over. Luckin Coffee about to make its debut to Nasdaq. They were saying that was so insane when I was stuck in that Luckin Coffee hold. AMD. AMD! See ya! Adjusted EPS 92 cents versus an estimate of 75 cents. They crushed the EPS number. Revenue 4.8 billion, estimate 4.5 billion. Revenues beat. Sick. Earnings saving the day for this market. Q's continuing to trade higher here after hours, I would assume. And yeah, Nasdaq's up another almost $2.50 from the close. Whoo-hoo-hoo. See, but this is the bull case, right? The bull case is that the strength of these stocks is able to take over, you know, for your multiples being compressed, right? There's two parts of the multiple there, right? There's P and there's E. So if that E is going up and the multiple compresses, then your stocks can hold steady. And for sure, Jonathan, it's a big thing. You know, so I had looked at research-wise for the market, and let me just fix this chart here. I had looked research-wise just for, you know, myself and for us, for the market, going back into the 1970s, about, you know, what happened when we had that really high inflation. And on a real return basis, it wasn't great. Like, stocks weren't great after inflation, but on like a nominal basis, stocks held in just fine. Right? Because if your inflation is 7%, well then, you know, if the value of $1 is 7% less than it was, then your stock at the same amount, everything else held equal, is 7% more also, right? But there's no real gain to you. You're just keeping up with inflation. But stock prices hold up. Yeah, we'll see. Is PayPal going now too? What's PayPal doing? PayPal smoked. All right, PayPal smoked. It's not all good in the hood. That was not that for once. That was not a Robin Hood pun. Usually I'm making those Robin Hood puns. It was not a Robin Hood pun. I mean, Google, Microsoft, they just own the world, you know? Whatever they want. Like, whatever technology that they decide that they want to get involved in, they just have unlimited amounts of money to be able to pour into it. So yeah, Josh said, bad stays bad, better gets better. But, and Oxy's the new Fed. They're still a growth company, PayPal for sure. All right, let's actually do some semblance of our meeting here. All right, SPYs up 0.9%. They're up about $1 here after the close on those earnings reports. Q's up 1.25%. Again, Q's getting about a $2 boost here after the report. And IWM is down from where we closed. Am I reading that right? We closed at 203.36 and now we're at 202.71. Man, IWM has just been such a laggard. It's still not above that earnings day high. Look at where the Qs are compared to the earnings day high. Look at where the SPYs are compared to the earnings day high. It's sick. All right, so let's recap here a little bit. So in the morning meeting today, we decided that it was going to be a less is more day. The bear market rally that we had looked for with a price target of 450 had totally happened by the close yesterday. It was a fantastic snapback. I did discuss the possibility of an upside overshoot in the morning meeting. It seemed reasonable to me that just given how big ranges have been and the state of kind of gamma in the market and all that stuff that we like to look at, that getting a move even to as high as 450, 650 is reasonable. So seeing some upside continuation here, especially a lot of that happened in the late part of the afternoon, the last hour of the day, plus after the close with like the Google earnings report. Really not too much of a surprise. So short time frame bulls are in control. A little bit bigger time frame. It's almost starting to get back to neutral territory here with this close above 450. To be honest, I struggle to call it neutral still at this point because we've seen no real high or low come in. I still think that big picture for this market to move up, we need a wedge or something like that to build out. I'd be surprised on a complete V-bottom, but we had V-bottoms in 2018, we had V-bottoms in 2020, so maybe it wouldn't be the most surprising thing in the world. I just thought that this one was going to take more time to play out a little bit. And still, the bulls are by no means out of the woods. They still have a lot of work to do to prove themselves. But when you got companies, I mean, Microsoft, Apple, and now Google are, and maybe AMD, are saving the market. Imagine if Apple's earnings were garbage, and that was followed by garbage Google earnings and followed by garbage AMD earnings here, based off where we were coming into the end of last week. It might be really bad, but all the same. So the game plan today was we got the oversold snapback. We're back into 450. We're almost at the 21 EMA. We recognize that maybe it could snap back a little bit harder, but coming into today, the game plan was it's a less is more type trading session. I find it very hard to justify doing new buying today unless you're looking at relative strength or you're looking at news. And I felt it was still a little bit too early to start initiating new shorts because of the possibility to overshoot to the upside. If we had seen like right off the open, and this is not what happened. If we had seen right off the open the market rip higher after the move from the last couple of days and get extended on small time frames and give a shooting star or something like that into these prices where we are now for 34 something like 454, then I think that you can start looking for your short in that scenario. But it's not what happened, right? Look at the SPYs here. We opened up. We were weak. It was very sloppy price action. This candle here at 10 a.m. was very concerning for us. A little negative Maribozu kind of came in, and it's like, okay, kind of a concerning candle. We discussed that maybe there would be a possibility of, it was just at 3:30 yesterday that the market was at 446. So would it be the end of the world if we traded back down to even 446? No, it certainly wouldn't be. This candle, though, small time frame, bears are coming into control. We get a little bit of a pivot. Price action just got sloppy. I commented in here that even though you really want to see, what I was saying was, if we can negate the negative Maribozu from 10 a.m. that the indices put in, then your shorts are probably out the window for today. It's an if-then statement, right? Which is like how I like looking at markets. And then when we started just kind of going sideways in here, I was like, honestly, if the bears were really going to be in control, we wouldn't be having the static price action in this area. We would actually be more genuinely selling off. And the fact that we just aren't breaking down is almost bullish. And then it was a little bit sloppy in here, but eventually we negated that negative Maribozu. So by 11 a.m., I really thought that the shorts were off the table, which still doesn't mean coming in and to buy. And then the rest of the market here was very sloppy until we started upticking just after 3 o'clock into the last hour for a strong close. But the market here midday, very sloppy, nothing to do, very choppy. Qs were the same way. IWM, maybe a little bit more volatility to it, but midday price action here was also pretty sloppy. But the stuff I had on the radar, I said right away in the morning meeting, I was like, guys, all I have on the radar today is energy stocks. I just pulled up my idea spreadsheet from this morning. It says first thing I have on here is day type. Less is more, is what I'm saying here. I'll even bring this over here. Day type, right? Less is more. Look to de-risk longs and possibly hedge if we trade higher. And then here's the ideas. XLE, energy names are bull flagging. And this isn't in any particular order because I'm really writing this for myself more than anybody else. But ExxonMobil, long versus $76, relative strength plus earnings. Oxy, long versus 36.39, bull flag with plus secondary on the Exxon earnings report. VLO, which we also know had a good earnings report recently, long through 83.02, bull flag inside day, ExxonMobil secondary play. Apache, long through 33.55, bull flag inside day, ExxonMobil secondary play. And then I also had this LMT on the radar. Those were my ideas for the morning meeting. It was basically energy, 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 and energy, figuring that if the market struggles here a little bit, I loved that the XLE had a real rest, especially yesterday and the day before yesterday when the market was acting really strong. So I thought that if today the market rested or the market was a little bit weak and the market mainly did end up resting, that these energy names could break out and give follow through, and that ExxonMobil really kind of, the earnings report there really kind of acting as the initial next catalyst to cause these stocks to technically break out of their bull flag patterns. And And I mean, that was it. That was it. The focus on this was incredible. ExxonMobil, you could have been long versus 76 off the open, and then it also gave this inside 5 setup for continuation for people to buy through like $77 for continuation. It was fantastic. VLO ended up not taking, and it triggered early through yesterday's high, that $83 area. VLO here, very quick break, second bar of the day. Risk on it was a decent amount, which I didn't love, and it was actually pretty spready. I don't have a ton of experience trading VLO. I was a little bit surprised to see how spready it was off the open, so I ended up not being involved in that one, but fantastic $4 follow through. Look at this XLE chart. Look at the 15-minute chart in the beginning of the day. It was just green Maribozu, green Maribozu, green Maribozu. Are we taking a rest? No, we're not taking a rest. It could just further continuation. It was super impressive there. Oxy. Oxy I did get involved in off of everything I talked about. basically trying to build in off these lows here. Beautiful bull flag, beautiful continuation. And then Apache was a little bit of a laggard. So I was a little bit nervous, but there was so much momentum there that I was like, you know what? I just want to be involved. 33.55 was the level that we discussed in the morning meeting. Bull flag, inside day, looking for continuation, and just great. You know, broke out here. I was nervous buying into this degree of extension on the small time frame. I was giving it some room. I was using this bar low as an out. I was using the low of the day as an out, and I was even considering leaving a little bit to the low of the bull flag on the daily chart as an out. And then just a massive upside explosion of a move here in all these stocks. So I'm swinging Oxy, I'm swinging Apache. It was great. I mean, we just did a fantastic job really being involved in the right sector on the right day when the market was otherwise very tricky. You know, I tried like one very small little day trade in Microsoft that I got stopped out of like almost the second that I bought it, and that was actually, I think I got stopped out like at the low, almost at the low of the day. But that still closed okay. But this just was, it was all more difficult money. It was all more difficult money unless you were focused on where the relative strength has been. The XLE chart pattern was beautiful coming into today. These are the types of setups that I'm talking about all the time, right? I don't think that you can just come in and buy these stocks or any stock on any given day. We can have a qualitative fundamental thesis, or in this case, a more genuine fundamental thesis that Stefan's been providing to us that can give us conviction. But, you know, if you just came in and you bought, you know, I did this exercise the other day, you're buying XLE at $65 because oil has to go up. Are you able to endure this pullback to 60? Not with size, you can't, that's for sure. And maybe not even period. So that's why the execution is so important. And some of these names now, you know, have given us so many opportunities to execute. You know, Oxy just being a big focus here. If you didn't catch the initial move here, there was this bull flag and this day to be able to get involved. And then you had the big technical correction because of the market. And we were calling out buys in the XLE kind of broadly on this day into this dip. And now, you know, next bull flag set up for continuation here today. So just really good stuff, being able to be focused on the right things. I was actually going back through the chat this morning because I was just doing, was going through this morning's VTF chat at about 3:30 today because I'm trying to do some stuff on the back end with the team here about just, you know, working on giving the ProDesk virtual trading floor the exposure that it deserves because of how awesome we are as a team. And I was just like, look at this timestamp this communication. Like just timestamp the communication here on the virtual trading floor. And let me scroll back up here again and try to find it. It's scrolling really slowly. But like you can timestamp the communication in here at like 9:40 a.m. Here, I just got up to it on even earlier than that, right? One of the first things I'm seeing is Greg at 9:36 going, "Do, come on in, bro, Oxy." And then you got Brandon a couple minutes later. You know, Chevron, interesting level, and I didn't mention Chevron, so people caught. I didn't like Chevron as much, but it was also a great trade. The gap fill on the inside day and up here. And you got, you know, Brandon at 9:37. Chevron, interesting level, inside day and up is getting close by. Like, this is just fantastic communication in here. We're helping the entire team. Christian at 9:38. I'm in CVX. Josh at 9:40. VLO I bought. Stefan at 9:40. Pat, buy Oxy. ET, I got a buy stop in the XLE through highs. Is that wise? James at 9:41. I'm heavy in Oxy. Matt, I'm trimming some Oxy and I'm trailing the rest. That means he's already crushing it. 9:42. Pat, ExxonMobil, nice rip. Gabriel sneaking in some Oxy at 9:42. You know, this conversation just really continues. Like, you timestamp when we're communicating this information versus the real time of the charts working. It's just phenomenal value that we're providing as a team to everybody on the team. So it's really good stuff, guys. That's what we've been working on building as a team here for some of us for some years now to get it to this point, and we're going to take it even to the next level. You know, so it's just really good stuff. And again, just being involved. Not that we're perfect every day. No one is. I'm certainly not perfect every day. I'm wrong a lot as well. But that's why we focus on risk management. And then on the upside, you know, when we're right, right? We got game plans in place for reward maximization, and we're communicating in real time. You know, I know it's hard. It's hard for me even verbally, and it can be really difficult when you're typing also. We're not trying to say, hey, I'm making a lot of money in Chevron, but you never said that you bought the stock, right? You know, you put yourself out there by saying, guys, I'm getting involved in this here now at this price, or guys, what do you think about, you know, this here now at this price? You put yourself out there. I put myself out there as well. And we own it when we're wrong, and we own it when we're right, because we said we got in when we got in. And then we say, hey, we're booking a little profit here. Hey, we're taking some off the table here. So it's just really, really awesome stuff. And that's all I had to talk about. I don't really have anything else. You know, we were really on point with the market. We were really on point by focusing on the right names today. I love the degree of participation of the team here, and that it wasn't just, you know, one person catching the big move in one of these stocks. It was multiple people being involved. So it's great stuff. And with that said, I'm happy to answer questions. So let me scroll back up here in the VTF. Just the mess of earnings information in here. Looking for questions. Sorry, just read there's a lot of chatter. I'm looking for the questions. I think the first thing I'm seeing here is from Rich Schaefer at 427. If anybody made any questions prior to that I missed, if you just want to copy and paste your question and resubmit it, we'll get to it. So first here from Rich. Take the 955 hammer candle on Oxy yesterday as an example. The 955 hammer and Oxy yesterday as an example. Yep, so that's what created the low there. What, do we have volume confirmation on this? A little bit of a volume uptick on it, not too dramatic. I would think you want this candle to close green on a downtrend at extension to take the trade, or does the color not matter? I think Pat and I actually might have a small disagreement on this, like a minor disagreement on this. So you should ask Pat's opinion about it as well. I don't care about the color. I don't care about the color. I think Pat would prefer this to be a green candle. I would prefer it to be a green candle as well, but I don't care. The idea behind a hammer doji is that a majority of the candle is a tail. The smaller part of the candle is the body. So whether this candle, like as this is coming up, and this is a decent sized body, a lot of times they're even smaller than that, whether it closes just below that high or above where it actually opened, which would make it a green candle, I don't think it matters. It's the technical point of the candle is that at this low, buyers took control from sellers, and when the period ended, those buyers were still in control. And then they maintain, you can see here, then they just maintain that control right into the next candle. When you're dealing with time frames, 5 minute, 15 minute, hourly, daily, whatever it is, you know, particularly like on a 5 minute chart, it just is going 935, 940, 945, 950, right, is when the candles are ending. If the candles here are actually ending at, you know, however many minutes it took on this next green bar to get above this high, then this would be a green hammer, right? Like if you had an extra maybe 1 or 2 minutes, then the color of this hammer would be green instead of the color of the hammer being red. And I feel like that the only reason that it's not is just because you have this specific time limit, right? The market's moving dynamically, but you're looking back at a chart here that ends in increments of 5. So that's why I don't personally think on that type of candle the color matters. Obviously, if you're looking like a Maribozu, it's a green Maribozu or it's a red Maribozu, then the color matters very much. But for me on this type of candle, it's the shape, not the color. Next here I'm seeing is from Robert. Hypothetical question. I was developing my game plan for Exxon, counting my probabilities. I love it. I love it. He's counting his probabilities. Counting my probabilities. Question here. Should I count market probability in my favor? If I was expecting market taking a break today due to their technical 450 level and after 2 strong days, so the market is not in play today. However, in theory, it means positive money flow for the XLE sector. So it means I can count market in my favor or not. Because that one probability might be the difference between an A plus and an A setup when I'm reflecting on it. I'm reflecting on my share size. Yeah, Robert, great question. I don't think that you can say that the market's on your side on this. I think that you would say that the market is neutral here, meaning it's not a positive or a negative factor, or possibly it was even a negative factor. You could have said at 10 a.m. here when this bar came in, I know that maybe you were executing prior to 10 a.m., you probably were, but I would say that prior to 10 a.m. I would diagnose the market as neutral. And then once this negative Maribozu came in, I would even say that the market itself was against you. Everything that you're describing in here about how we are expecting the market to take a break, which maybe means that money gets rotated into XLE, that is a description of the layer of probability that we call relative strength. That's what that is. If the market's able to just go sideways today, but energy beasts, that's relative strength. And if amongst energy, Exxon is the strongest because of its earnings report, that is relative strength on top of relative strength. It's the strongest stock in the strongest sector. So that's how I would look at that, Robert. Great question. Carl, Henry, and Brenda in YouTube. Thanks for calling the SPY target. No problem. Hope you nailed that. Still scrolling through just a lot of Google information here. Mike L asking, how is the project coming to share the morning ideas for those that missed the morning meeting? I know I don't miss the meeting, but sometimes I have to drive kids at that time. I had another conversation about it, Mike, on Friday of last week, and I had another conversation about it today. The folks that I need to work with were pretty busy last week with a big Scott Ruther event, so I couldn't really get too much of their time last week. But I think that that's going to be coming together, and I think it's going to be coming together soon. I am on vacation next week. I don't think I mentioned that yet. So I'm on vacation next week, but because I'm on mountain time, I'll probably still be around a bit in the morning. I'm not sure if I'm going to do the morning meetings or not. But my goal, Mike, I hope I'm able to achieve my goal. I don't like to overpromise and underdeliver as a rule. My goal is to have that online fully for the week I come back from my vacation. So I'm trying to have the team here help me with like a prototype of what I want it to look like this week. Next week I'm out, and then the week after that I want it to be ready to go so we can kind of start sending that list out at 9 a.m. in the morning. So hopefully that'll be coming together soon. Oh, the YouTube ads on Google. I assume that they brought those YouTube ad numbers up. YouTube is low key better than Netflix. I feel like as far as a streaming service goes. And I don't. Does anyone pay for the the YouTube Red or whatever it is, that premium version where you don't have to watch the ads? Because I don't. I don't actually. I pay for Spotify. I don't want to listen to the Spotify ads, but I don't do that for Google. But it is, and they just keep banging you with more and more ads. It used to be one ad that you could skip, and then you'd be good. Now they hit you with 2 ads in the beginning, one you can't skip. They'll throw one in the middle. They'll throw one in at the end. and then your next video comes and you got 2 more. So they're really banging you out on the ad growth there. So that has to be moving up. But I don't pay for the Google Red or whatever they call it, where you get to have 0 commercials. I press that skip button as fast as I can. Bill K here, I saw someone float the idea that maybe Google wants to get into the Dow with that new share size, and I thought it was an interesting theory. That is a really interesting thought process there, Bill. Really curious about that one. Chinggis, questions on probabilities also. What would the order of probabilities would be? Like, what goes higher probability? Okay, so basically the question Chinggis is asking is, so we have our, whatever it is, 7, 8 major layers of probability that we're paying attention to with our trading. We've got, the market, is there news, relative strength and relative weakness, time of day, a time frame continuity. I don't have an order for those necessarily. Broadly, I think that the market is probably like the most important one, but I don't necessarily classify time of day as more important than if there was news or vice versa. I think that it's kind of on a case-by-case basis, and what it's really more about than anything, Chinggis, is the aggregate. Like what Robert was saying earlier when he was assessing it. I think it's really more about the aggregate. How many layers of probability are on the side of the trade versus neutral versus against it. That's how I look at it, not necessarily in order so much. Stefan, I would look at an opportunity to buy tier 2 names in the sector. If Exxon does well, that means you want to rotate into an Oxy or an Apache. 100%, and that's exactly what I was saying in the morning meeting. I agree with you totally. I was like, I really like this Exxon. There's a trade here versus 76. That was on my list, but I'm more interested in getting involved in Oxy and Apache, maybe VLO, as a secondary to the Oxy. The ExxonMobil earnings report there to get it going, and that's why you see me right now on Oxy and Apache. That was my entire thought process as well. Awesome stuff. uBlock Origin. I've never heard of it. I'll have to check it out. Paul saying ads mess up the Derrick the Trader videos. Am I getting ads on that? Do we hit that point? I might have to reach out to T3 and say, hey, let me get some of that ad revenue. Probably, what do you get, like a 1,000th of a penny per advertisement that someone watches? Okay, we'll build that up. Oh, really? Look at you guys. You guys are all a bunch of hackers, man. Knowing how to get around the advertisements. I didn't think that an ad blocker would block like a YouTube ad, because I thought that was just built like almost into the video. But I know nothing about trading. Nice Zor. From Rich here. Rich was trading bros today. What's up, bro? Wow, great follow through on that bros on really high volume. Was trading bros today and was selling all the way up. I sold the rest of my position at 55.50 because I literally hear your voice in my head saying it's extended, don't buy. Okay, I'll read the rest of the question, but just because I'm saying extended, don't buy doesn't necessarily mean I'm saying sell everything and get out, right? I think that sometimes you look at spots where it's a bad risk reward for an entry, but if you're already in, you're already up a lot of money. I'm a big fan of risking money that you've already made in order to make more. And I know for myself, I will oftentimes be willing to risk significantly larger amounts, like significantly larger amounts that I would never actually risk on positions that I'm already in the money on, as opposed to like I would never buy it and risk this much, but hey, I already got it and I'm this much in the money, I'm willing to risk that, if that makes sense to you. So you got out at 55.50 and then you rebought. Look at you. Oh yeah, so it's here, I'm assuming. Yeah, this was a super big extended move. I personally wouldn't get out of the entire position. When I see this type of extension, I'm gonna probably take something off, and then look for that add back a lot of the times that I'm always talking about. So you rebought 52.60, really nice. You got this little tail that came in. This corrective price action here was a little bit more than you would like, in my opinion, but it doesn't matter. It still held the lows and then worked. Notable here, just as a lesson for everybody, because we were talking about utilizing the inside 5 breakup after a negative Maribozu for trend continuation. Look at this one. Negative Maribozu, inside 5 breaks down. So are you getting in trouble here? You shouldn't be getting in trouble here because you should never execute the long, right? We utilize the inside 5 pattern for trend continuation, but you got to be buying the break of it to the upside, so that never actually occurs. So because that never actually occurs, it's no harm, no foul. Pullback happens here even deeper, and then eventually this doji comes in. This is tough though, because this pullback is a little bit deeper than I would like it, and this doji is happening on really low volume. But all the same, you've rebought 52.60 here. It's a good job. I'm hoping you did it on the way up, and then you sold the rest at 10.25 into here. I'm always scared of losing money and can't hold for long rips. How can I build more confidence while my head keeps telling me net money and leave? Sure, Rich. So that's a little bit of what I was alluding to here before when I was saying I'm not exiting my entire position. Now, I would never exit my entire position here into this move either. I'm looking for the bigger move always. Now, entire position doesn't mean don't take some off. It's okay to take some off the table. Put some money in your pocket. Not only is it okay to take some off the table initially, but you want to take some off the table to cover your risk. So this is how I'm able to do it mentally. I have no problem giving back huge sums of P&L. Traders that know me know that I will give back really large sums of P&L that I'm in the money on. That's what I was saying. But I'm doing that to make more, and I'm doing it from when I'm in a win-win situation. So once your risk is covered, it doesn't matter, right? I made a video on YouTube, in the Derrick the Trader YouTube, that you should check out, which is called, I think it's like, you don't go broke taking profits or something. Because it's a common saying in trading. Let's see if we can find it. It's a common saying in trading that you don't, this one right here. You don't go broke taking profits. Check this one out. Because I disagree with it. I think that you do go broke taking profits. Because what ends up happening is you'll always be there for your losers, but if every time your winners are starting to work out and you liquidate them immediately, a lot of times the math isn't going to work out for you where you're going to be a really successful trader. I spend a lot of time focusing on the downside, because the number one reason why traders fail in this business is because of a failure to manage risk and manage money properly. The losses are just too big. But the other side of this equation, and another reason why some, albeit a smaller percentage of traders don't succeed in this business, is because they don't make enough compared to what they lose. So you got to ask yourself, what is a bad day for you? And just, I always want to use simple numbers. So if a bad day for you is losing $500, a good day for you can't be making $500. If a good day for you is that you're only going to make $500 and a bad day for you is that you'll lose $500, you're not going to be able to be, I don't think, consistently profitable in this business in the long run. If a bad day for you is losing $500, it's not a bad day if you make $500. We'll take it, right? A green day is a green day. We always want to be green first and foremost. Whether you made $1, $100, $500, you always want it to be green. But big picture, if you're going to have a bad day that's $500, you have to be able to post some good days where you're making $1,000, $1,500, $2,000, $2,500, or even more. That's the only way that the math's going to work out for you in the long run in this business where you can actually be successful. So that's where it comes back to this, this common trading saying or investor saying, you don't go broke taking profits. You do go broke taking profits if you're leaving too much on the table. If you're never putting yourself in the position where your winning days are a multiple of your good days because you're getting out as soon as you're up $500, you will go broke taking those profits. So for me, I take psychological comfort in having my risk covered, which is why I think it was Cody, if you're here, in Apache today. I sold some Apache at $33.84 on this bar right here, and I guess maybe Cody sold some as well. And then you know, he made a comment that was like, "Oh man, it's one of those sales that you look back and you really wish you didn't, you know, take that sale to cover your risk." I don't ever look at that. I don't care if Apache went to $75 today. I would still look at my sale at $33.84, and I'd be very happy with it. Because this is not a sale about making money. This is a sale about managing risk. Period. I need to manage risk first. Now, I get that sale, maybe one other. My risk is covered. Now I don't care. I know in my brain there is no way I'm losing money in Apache today. There's no way I'm losing money. So now that I'm in that situation, I don't want to just be in Apache to make $100. I want to be in Apache to try to make thousands of dollars if the thing will give it to me. The risk is covered. I don't care. I would rather make zero on the Apache trade than have the trade work out really well and make a small amount of money. Because I know that in it's a lower percentage of times for sure. It's a lower percentage of times where you just buy that ExxonMobil of $76, and next thing you know, it's blasting through $80. It's a lower percentage of times, but I need to be able to have stock for those lower percentage of times when I really nail things so perfectly that the huge move comes in, or I'm not going to be able to make real money. I was saying this on the VTF this morning. Big money comes from capturing the big moves. So get your risk covered. I will never be upset that I sold stock at this price and it gave a great continuation. I will never be upset for that because it's not about making money, it's about managing risk. But if I ended up getting out of my entire position at, you know, 34.25 because of how extended it was, and look how extended it is. It's super extended. Look how extended it is at 34.25 on the 15-minute chart. Right? Just getting real extended here. It's like, this is a $35 stock, a $33 stock, and it's extended by like $1 on a 15-minute chart at that point. It's a lot on a percentage basis. I don't care. I'll give it all the way back. I don't care. I'm not getting out of the position. I need to be able to make more. And again, this is where the benefit of having a large tier size is, which I know not everyone can necessarily do that. But if you have a large tier size and then it's really extended, I could just say, okay, you know what, I'm just going to take off 100 or 200 shares. I still have 5,000, it doesn't matter. But if you've got 400 shares, if you've got 500 shares, if you've got 200 shares, it gets trickier. I'm not saying don't ever, if you don't have a lot of stock, take some off into extension because you can look for the rebuy. I'm saying it gets trickier because it's just a significantly larger percentage, right? If I've got 5,000 shares and I sell 200 shares at 34.30 because of how extended it is, thinking maybe I can just rebuy it at, you know, $34 and keep the difference, that's what I call the cash flow trading that I like to do. That's going to be just fine if I don't actually get the stock back because it's such a small amount of my position. But if you only had 300 shares and you sell 100 shares at 34, you know, 30 because you think you can buy it back to 34 and it doesn't give you that opportunity, and next thing you know it's at 38, that stings a lot more. It's all stuff that you need to think about from a game planning perspective. I think I have a 5 o'clock meeting today. I just remembered, so I only have 4 more minutes here. But Rich, these are the types of questions that we want in the afternoon meeting. It's a fantastic question because it helps everybody. Rowan's got jokes. Rowan's always got jokes. All right, scrolling through here on the VTF, but I am just about out of time. It looks like I covered things. So I'm going to end the meeting there. Great stuff today, team. I'll see everybody tomorrow morning.